Hello everyone and welcome to today's morning report on Wednesday the 27th of April with me, Japan Market Analyst at Handset Markets. It is FOMC day and we're not really expecting too much from the committee tonight. No rate hike expected. Pretty much, well, the Fed funds futures are pricing in about 2% chance tonight, but the markets will probably be looking more at what any changes to the FOMC statement are sort of signalling for next month, potential for rate hike in June. So you're looking for any sort of change in the language, sort of alterations maybe from the international economic and financial conditions. That's basically one of the reasons why the Fed is sort of preventing from a rate hike, and also possibly sort of from the US domestic front as well. So that's what we're looking out for pretty much today. Markets are fairly subdued in front of the FOMC tonight. You can see that the dollar is actually down again. Interestingly, it was sort of earlier. It was fairly well sustained, fairly well supported. No real direction, but slightly down. Interestingly enough, but that is, you look at that compared to the Treasury yields, which have been rising strongly in the last couple of weeks in front of the FOMC. So the fact that the US dollar is down again. It's just a little bit interesting, isn't it? It's a sort of a bit of a dichotomy there. But markets generally are pretty much set. We've had the oil price, which again rebounded sharply yesterday. It was looking to be drifting lower, and then bang, it had a big sharp rebound, and it's held on to those gains today. So commodity prices are actually slightly positive into this FOMC. Certainly on the oil price, but also gold, and I'll talk through that gold chart in a bit, and silver also finding support. Now, in terms of what we've got else to look forward to today, well, we've got a couple of other central bank meetings. You've got the RBNZ, the Reserve Bank of New Zealand, and the BOJ, Bank of Japan, tonight. Now, the Reserve Bank of New Zealand cut rates unexpectedly last month, and with a view potentially to further cuts. Now, I don't think, the chances are that you're not going to get a rate cut again today, and the market's not expecting it. But there is a very slight possibility. The other factor is the Bank of Japan, which suggestions last Friday were that they were going to expand easing measures through further negative interest rates, possibly on bank loans. So that could be part of the BOJ announcement overnight. But first of all, obviously we've got the Fed to factor in. Prior to that, we've got UK GDP. Now, UK GDP is at 9:30 today, and is expected to come out at 0.4%, which is slightly down from the revised higher 0.6%. Although this shows the first reading from last quarter, which was subsequently revised to plus 0.6. So 0.4 is not all that great for the UK GDP. And then this afternoon we've got the oil inventories report, 2.5 million barrels there. So basically at where we were last week, pretty much. Although it does tend to drive a bit of volatility, but you might see that not so much in front of the Fed. So that takes me to my chart today, which is the Kiwi dollar, actually. And we've had this correction in the Kiwi dollar in the last sort of week or so. Slight bounce yesterday, but again overnight to this morning we had a bit of a retracement of yesterday's gains. Now that came on the back of weaker than expected Aussie inflation. And look at this, you've got this uptrend channel. But within that uptrend channel you had this uptrend that has now been broken, and it's now been used as the basis of resistance. So you could see that this chart sort of moves back towards the bottom of the trend channel. Not only that, look at this. Is that a left-hand shoulder, head, and a possible right-hand shoulder there? Along that neckline at around 68.20. 68.20, which was the reaction low mid-April. Again, pretty much the reaction low a few days ago. And that sort of comes in now. Sorry, I can't get the crosshair on it. There it goes. And that comes in now as your neckline potential. You look at these momentum indicators; they're very interesting. Every time the stochastics come back to this sort of level, turn up, it shows a continuation of the trend channel. RSI, every time it gets back towards this sort of high 40s level, it shows a continuation of the trend channel. But if this RSI continues that sort of little overnight drift lower, then it could suggest that it's beginning to put pressure to the downside. So you can see here on the hourly chart, that's that pivot line at 68.20. It's the neckline. Zoom in, and you can see overnight we've just seen that rolling over again. Now the rolling over has come with the hourly RSI around the 60s level. MACD lines are crossed lower, and stochastics are falling away. So it sort of is putting pressure possibly on that 68.20 mark, and that will be a level that I think traders will be looking out for tonight with both the Fed and the RBNZ. Possibly both sort of tracking a potential sort of decline in the Kiwi dollar, because a hawkish Fed would drag this chart lower, as would a dovish RBNZ. So you've got the initial resistance 69.10, and then the next resistance comes in around that old high and reaction low, which is around about 69.50 as well. So a few levels for you to work with there, but certainly the Kiwi is not quite as strong as it once was, and it could well be coming back towards the channel lows. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.